welcome, welcome, welcome. So, hey, in just a second, we will be sharing the tea on planned giving for nonprofits. But if you've never met me before, I'm Sabrina, the founder of Supporting World Hope, a nonprofit consulting company I started after 25 years in the industry. And today we have with us Jim Tyvek and Adam Tabak Morano. They're financial advisors with Hearthstone Wealth, and we will be talking about planned giving for nonprofits. But before we get started, as people are joining in, if you can click the heart or like button, if you can hear me loud and clear, and let me know where you're watching from, even if you're watching in rebroadcast. This is going to help us with our Facebook algorithms. So in order to give people a little bit of time to jump on, let me tell you a little bit about myself and why I started this company, Supporting World Hope. I started this company because in 2018, I was diagnosed with cancer, and after being diagnosed with cancer, you kind of look at the stressors in your life, and you look at all types of things. And the contributing factor to the two cancers that I had was stress. And so I decided to retire, but I did not want any other nonprofit professional or CEO, ED, to fall into that situation. So I created this company to help you. And so as a part of that, I have some free resources that I provide. I have a VIP resource library that has all types of sample documents on them. And as well, I have free live coaching every Thursday in my Facebook group called Nonprofit Professional Exchange, as well as other webinars that I do free once a month. And we bring you the Sipping Tea with Sabrina, where we find these experts in different areas that come on and talk about the topics that they specialize in. And so that's why we have Jim and Adam with us today. So Jim and Adam, tell me a little bit about yourselves as financial advisors.
Okay. I've been in the business for 40 years, and I do business financial planning and personal financial planning. I've taken a comprehensive approach to my planning with clients. I try to help them visualize their goals, look at their values and their behaviors, the things they're doing. If the things they're doing align with their values and their goals, they'll be more successful. So sometimes we have to do coaching and sometimes consulting, but their goals are important. And so, since I've been in business so long, the products and the practices vary tremendously from place to place.
And my name's Adam Tabak Moreno, and I joined his team in February. My approach is more of the personal financial planning and the investment management side of things. That's my part of the team. My role here is to help out with those aspects and to make sure that everything between the retirement plan to their estate plan to succession plans within the business, I play a supporting role with Jim's practice. Sabrina, we can't hear you.
Good. So thank you for that. We have a couple of questions that we are going to be asking you about planned giving. And we want to start off with probably one of the basic ones. So how would a nonprofit launch a planned giving program in their organization?
Well, to begin with, the planned giving requires a plan. So that means, what are your goals and what are your objectives, both annually and long-term, the short-term and long-term goals. Once we determine that, then we look at what the costs are, what your expenses are, how much you want to raise, if you will. Once we know how much you want to raise, then we talk about a planned giving program, if you will, and what approach to take. Are we going to have an event? Are we going to have memberships? Are we going to produce a product? Are we going to have, let's say, some kind of a celebration, if you will? Or are we going to basically look for donors that would grant us money or financing, if you will? The object is to generate a plan which you have recurring income for long term.
So why does it matter? I know you said recurring income, but is that the only reason that you would launch a planned giving program, or are there other reasons that you would benefit from it?
Great question, because a lot of them have what they call a capital campaign. They want to buy a building. They don't want to pay rent anymore. So you want to have a capital campaign. That's for building. Maybe they want to acquire some particular equipment, if you will. That's long-term equipment, computers or technology. Or perhaps they want to buy some land that they use for their services, if you will, or transportation. There's a lot of large-term capital kinds of expenses. Also, there's a giving where they have an ongoing service they provide. They want support for that service on the long term. That's
Okay. So what is I guess for me, when I think of planned giving, I think of an endowment. So I want to get that question off the table. So what is an endowment and how does a nonprofit start one?
So an endowment is essentially when a donor donates a chunk of capital to a nonprofit with the understanding that the income off of that capital be used for their expenses or for a specified purpose. A nonprofit could start an endowment by accepting offers of donations of large sums of capital. It doesn't necessarily have to be large, but just capital that's donated on behalf of a donor.
Okay. Yeah, because I remember we started our endowment at our organization and I started with absolutely zero. I just started with a board resolution. And as people sent in gifts that were not designated, like if they didn't say this gift goes to arts or something, we would put it in the endowment just to kind of grow it slowly. But you're saying that a donor could actually just give you a large chunk and you can start an endowment as well.
Right.
Yeah, the donor creates the endowment.
Okay.
Their attorneys are their estate planners, if you will, and then they donate that endowment to the organization. The endowment actually has the restrictions, the limitations of how the money should be applied. Should be used for operations or services or acquisition, whatever. They define how it is to be applied. Texas Trust Act controls what types of uses you can do for an endowment, okay, for a donor type endowment. But an organization can have an endowment and then have people contribute to their endowment.
Okay. So are there any proven drawbacks to having an endowment?
One drawback to having an endowment is that money is only specifically, or the income is only supposed to be used for that one specified purpose. Meaning that if someone donates a large chunk of capital and says that this is only meant for operating expenses, well, that income can't be used to help fund the acquisition of a new building or to hire new staff. Maybe that's a bad example because that falls under operating example, but you get the point.
Okay. And so it's kind of restricted, basically. Yeah. It's restricted based on the wishes of the donor, right? Exactly. But if you're board created, as Jim said, then it's restricted based on what the board kind of puts in place.
That's right.
Okay.
One of the
are there, and this is not a question that's up there, but with 40 plus years of experience, I'm sure you've had this situation. Has there been a time where, I mean, with COVID just happened, let's say you had an endowment, right? And it was restricted for equipment or restricted for some purpose, but you had a pandemic that no one expected. Could you go back to a donor and say, is it possible for a donor to unrestrict an endowment?
Yes, that's illegal. They have to change the endowment. Okay, that's a grantor adjustment in the endowment. The problem with endowments today is that a lot of them are designed to produce interest income only, and we're in a low interest environment. So we started out at 5% interest, now we're down to 1% interest. So that's a squeeze for endowments. And so endowments have to go back to the donor and say, listen, we need more money. So how can you do that? The donor can say, okay, fine, I'll give you a donation. That's one thing. Or I can modify the endowment. Okay? So there's ways where they can do that.
Okay. So I have another question here. What are the elements of a clearly defined investment policy? And I guess specific to an endowment, but an investment policy overall.
So a clearly defined investment policy, I'll start by explaining the purpose of it. An investment policy statement essentially is a rules of conduct that is drafted between the nonprofit, and the professional manager that's helping them with their investments. And essentially the purpose that it serves is that it helps define exactly how the investments are to be invested and what the money is used for, what the purpose of the money is for, what the time horizon for the investments is, and how much risk the nonprofit is willing to take with their investments. Because with the stock market, not anything is certain, so you want to make sure that you're comfortable with the amount of risk that you take with it. So an investment policy essentially just outlines the way that the investments can be managed and worked with.
Okay. So
one more thing, the investment policy statement can also define what you're not going to invest in. If you're a religious organization, you may not want to invest in gambling, if you will, or TV or movies and things like that, the adult stuff, if you will. So you can define where you don't want your money invested. That's part of your policy.
okay. So you in the policy you can define where you don't want the money invested.
Right.
Okay. Because you can determine how much risk, as Adam was saying, that you want to take, correct? Okay.
One common thing that's seen in a lot of investment policy statements, especially now, is making sure that you invest in only environmentally friendly companies, or companies that strive to be carbon neutral, or that have an equal board governance and stuff like that. So that's becoming more and more popular, and it's something that comes up more in our conversations.
Oh, okay. So I never even thought about that. That I guess that makes sense, especially if that's the donor's preference, right? So how can a donor? The next question I have is, how can a donor use a life insurance to make a charitable donation?
There's two ways. One is they can take their current life insurance and just make the charity a beneficiary. Simple. Right? So if they die, the life insurance, the insurance company will pay the beneficiary, the charity, the money. Secondly, they can donate a policy to the charity. The problem with that is that there may be a premium tied to that policy. So if there's a premium tied to the policy, then someone has to make those annual premiums. That may be too much for the charity to bear to make those premiums. So they want to produce what we call, what I've done in the past is paid up policies. These are policies that are paid up to age 100 for the insured person. Okay, that way there's no maintenance cost on the charity. There may be some management activities regarding how the money is invested inside the policy, but there's not much work to be done. Okay?
To add on to that, one thing that you can also do is that some policies have a rider that you can elect to choose, where a portion of the life insurance proceeds are then given to the charity of your choice. Okay.
And so I have this question again. It's not up there, but you guys can handle it. So this is going to be weird, but you can handle it. So like, I'm a member of the credit union. I won't name the credit union. I was about to, but I'm a member of the credit union. And as a part of the membership benefits, they provide a no cost insurance policy. So in theory, could I make an organization a benefactor of that insurance policy?
Correct. You could. If you're married, your spouse has to sign off on that, because typically a spouse is a beneficiary. So you'll have to have what they call spousal consent if you're married. That would be a concern. That would be a concern. The other thing is, if you lose your membership, you lose the insurance too. Okay? So there's a concern there. So if you're no longer a member, you may lose that benefit.
Got it. Okay, that makes sense, but it is still easy, a way to do it if we think about it. So just let me allow people, if you're just joining us, welcome to our broadcast. We're currently talking about planned giving, and we've just covered what is an endowment. We've covered some of the drawbacks to having an endowment. We've discussed how can you launch your planned gift, and we've talked about investment policies as well as insurance. So let us know where you're watching from. Click the heart or like button if you can hear us loud and clear. And if you're watching in replay, put hashtag replay for me and let us know where you're watching from. This is going to help us with our Facebook algorithms and keep this video at the top. That way, everyone can enjoy this, whether you're watching it live or in replay. So the next question that I have for you gentlemen is, how does a nonprofit accept donated land or a donated business?
Okay, a donated land is pretty straightforward. First, you determine the value of the land, so the donor knows the value of the gift, if you will. Okay. Then we look at the tax consequences. Now, most nonprofits are tax exempt, and that's also exempt from property taxes. So you gotta be careful, make sure that the nonprofit is exempt from property taxes because they're taking on a liability, okay, on the property. The same token, they may have the right, based on the donor, to sell the property. The property just be given to them because the donor may have inherited the property, wants to give it to a charity, that's fine. So the charity then sells that property, and since it's a nonprofit, and it may be tax exempt, they won't pay taxes on the profits of the building. That's often happened. They could use the building, if you will. Okay. So once the title company transfers the title from the donor to the charity, that's a complete gift. And that's the time, that's when you determine the value. So the donor knows, what's the value of my gift?
So what, part two of this question again. So what expenses should the nonprofit expect when land is donated? Because I heard you mention assessment, and I heard you mention title company. Are these costs that the nonprofit assume, or is it costs that the donor assume?
Typically, the donor would include that in the transfer. They don't understand there'll be a cost to do that, okay? But the nonprofit, this is important because one of my students at the university had a situation where their nonprofit was donated land in Los Angeles, big piece of land that they thought, wow, we hit it big this time. The problem was it was an environmental zone. It had environmental liability, yet it was a disaster. They said, no, thank you for your gift, okay? I can't handle that. So you want to understand what it is you're being gifted and what liabilities come with it and what kinds of concerns you might have about its use, if you will, because it can come with liabilities. Somebody must just wants to dump some land on somebody. No, be careful. So it's just a caution, okay?
Yeah, that makes sense. How about a donated business?
In my experience with donated businesses, they're a little more complex. It requires attorneys and accountants to look at the valuation of the business, what its operating purposes were, and it's sustainable. The only one I've had that was sustainable was a small farm and ranch in California, where it was palm trees. They sold palm trees. That's all they did. Was a large chunk of land that sold palm trees. And so the money from the sale of palm trees went into the charity, and that's what they do. The charity had to pay for the staff to do this. Only one person. So that one person was their cost, which was reasonable for the value they would receive. So in that case, they took on an LLC, had a palm tree, the money went into the charity did well. Okay. So that wins. Some are more complicated than that. So you got to do some business planning and understand what it is you're being gifted, what's its liabilities, what's its obligations, and what's its cost.
Thank you. So, and the reason why that question is up there, because I had, and maybe you can advise, I get free advice on air. just a question. No, it's been a while though. We had a donor who, a board member actually, who had a business, a construction company, whose son did not want the company, and he didn't have anyone to give it to, and he considered giving it to us as a nonprofit, but it seemed so complex at the time that we passed on it. If someone was in this situation, what would be the starting point? What would you tell them? Who would you tell them to reach out to first? What would be the process, I guess?
The process would start with the business's accounting people. Look at the books and records, if you will, okay? Make sure how much income is being recurring income if you run the business. What's the business valued at? Because the donor wants to know what's the value of my gift, okay? Typically, okay? At the same time, you want to look at what, again, the obligations of the business, the type of business. In a construction firm, that can be seasonal to some extent, okay? And it can also be in an area where it's not growing, if you will, okay? So what would be the cost if we had to dissolve the business? So look at you have to take a negative view in a sense. What would it cost us to dissolve the business? What assets can we sell? What value would we receive? What effort would it take? Okay, it will require an attorney and accountant to do that, though.
Okay. So that helps in retrospect. That's a good starting point. You know, nonprofits get the opportunity to have some unique gifts, and sometimes we just don't know how to accept those gifts or even if it's beneficial to do that. So that's some good advice. So my other question and moving the conversation forward is, what is a bequest and what is the difference between a charitable remainder trust and a charitable lead trust?
So a bequest is when someone lists a nonprofit in their estate planning or their will, more specifically. So say that John, for example, just throwing a name out there, John wants to leave $50,000 to the charity of his choice. Well, he would list it through his estate planning, list the charity as a beneficiary. So essentially, when John passes away and the money is given out, that charity would receive the money. Now, for a charitable remainder trust versus a charitable lead trust, the difference is that a charitable remainder trust pays out income to a beneficiary you list for a specified period of time. Once that time expires and it passes, the remainder, which is where the name of the trust comes from, the remainder is then donated to a nonprofit. Now that's the polar opposite of a charitable lead trust, in where income is paid to a nonprofit for a period of time, and then once that expires, whatever's left is then given to the beneficiary listed. That's the way to think of it. Just think of the remainder is given to the nonprofit versus the lead investment is then given to the charity.
Got it. And so how would you talk to a potential donor about a legacy or bequest?
You start with what your values are, what it is you're going to provide to whom, who's your target market or your target charity is, and then look at their values, what they value, what they do, and then basically you have to ask what they think they could tolerate as a gift. How much of a gift will they consider? Okay, but you have to give them a proposal. These are the things we can do. You can have different types of levels. You can have a platinum level or gold level or silver level or whatever, different levels of donations. So you could say, we have these different programs. Do any of them attract you? Are you interested in these? And so give them some options, if you will, so they have some choices, if you will. But it's tying your values with their values. That's important.
And so what are some examples, just because I learn by examples, and I'm sure those out here that are listening learn by examples. So what would be a conversation? Because I always got nervous. I will be very honest with you. Always got nervous around talking to people. I mean, you're basically talking about death, right? And so I got a little nervous when I talked about wills and bequests and things like that. So what would be a key phrase that you will open up the conversation with when you're specifically talking to a donor about a bequest?
Start off with talking about their legacy.
Yeah.
What it is they want to leave behind. What's the message they want to leave behind? Who they are and what they've done. Okay. If they have a large family, they have children, grandchildren. So their legacy could include things they would leave behind that their children, grandchildren recognize.
Yeah.
I've got some families who never gave anything, didn't share anything, that died, and a lot of the money went to the IRS, went to the government, okay, because they didn't provide for that.
Yeah.
And so there's so many different people who could have been served or could benefit from that, from their decision, but they didn't take that route.
And while death may be an uncomfortable topic to talk about, it's best to focus on the positivity of it, which is, by leaving a legacy, leaving this essence of who you were as a person, you have a little bit of immortality. And so your family, your history, what you stood for can live on even past your own expiration.
That makes sense, because that would speak to me. So that makes a lot of sense. So my last question here, but I'm going to add a question as I've been doing throughout this. What is a charitable gift annuity and how does it work?
So a charitable gift annuity essentially is when a donor donates, I've been saying that a lot today, but a donor donates money to a nonprofit and then arranges for a percentage or an income or an interest to be paid off of that donation for a period of time. After that period of time is up, The nonprofit stays with the money, and that's that. The transfer is complete.
Okay, so my last kind of question or statement is, all of this sounds very complicated. So what is your role as financial advisors in any of this process?
I do a thing with nonprofits called Dreamscaping. I go into your dream. What is it you really want to do? What is it you want to accomplish in the 3 years or 5 years from now? What do you want to see done? What has to happen to make you feel happy that you're working with me today? Okay. And so we try to get into that dreamscaping and get some sense of what they want to do. What have you done in the past that's successful? What have you done in the past that didn't work? So, okay, what are your comfort levels, if you will? Okay. But more specifically, this give me some time, some milestones, the things you want to accomplish, if you will. Okay. It may be increasing the service that you're servicing, let's say a Boys and Girls Club, and you want to expand that to other areas because there may be some underserved. We have colonias here that are underserved. Maybe you want to go into the colonias and serve up there. So that's a way you want to have maybe a capital campaign for a van, or you want to have an event to do that. There's different approaches to do that. So it's important that we align those things. And the dreamscaping is a process. We have discussions. This is a discussion point. Okay. And from that, we develop a plan.
Okay, so dream statement. So don't be afraid to dream, and as a financial advisor, you can take them through that process and help them understand some of these. I call them intimidating terms, but if you're a specialist in this area, it's not an intimidating process for you. And sometimes, you know, you just got to turn it over to the experts. And let the experts handle it. I'm going to check and see if we have any questions in the comments that we can answer here. To see if, so give me space and grace to look at that. And in the meantime, I would like to let people know that most people have questions about fundraising. And so they always ask me, Sabrina, can you help me with fundraising for my nonprofit? And the answer is always, yes, I can. And so the next steps is for you to visit my website at www.supportingworldhope.com to check out my services. And if you're watching and rebroadcast and you have a question, please feel free to post that question. And I know that Jim and Adam will get back with you on that. And we don't have any questions, but we already have 2 shares out there. So that is good. I want to be able to offer you the last words as far as financial advisors and any advice that you have for particularly a small nonprofit that feels like plan giving is not for them, that is too complicated or is too complex. What advice would you give them? What would you say to them to move them forward?
Okay. It has to do with their commitment to their goals, okay? Well, I have to work on that, okay? Because that's important, if you will. How committed are you to your goals? It's a little bit of work. It's a little bit of homework, okay? It's some dialogue. You got to go through some dialogue, if you will. But it's all doable. And again, like I said before, I do micro charities where we just do a garage sale. We do a bake sale. There's something simple, okay? Then we have an event and we see an organization evolve. If the need is there and people see it, it will grow, okay? And so that's important. Same time, bring in other people to support you, okay? You have to be interdependent, if you will, with other folks and share other people's talents and bring it together, okay? But it's doable. You got to believe in it too, okay?
Perfect, perfect. So if people wanted to get in contact with you, how would they get in contact with you?
Phone number.
Yeah.
618-0050.
618-0050. 618-0050. And we'll drop that in the comments so they can reach out to Jim or Adam with any questions, or if they want to explore this conversation some more and really think about what plan giving could mean for their organization. I tell you, it's a game changer, specifically since my focus is major gifts and building relationships. The whole goal is really to take people up that ladder. In my head, there's a ladder, you know. You start off with a gift and you want to get a second and the third. You want to move them up to reoccurring gifts. And ultimately, you want to move them up to a planned gift or a legacy gift. very much what they talked about. What legacy do you want to leave in the community? So as Jim was saying, you start off with the micro and you lay the foundation now, building those relationships so you can move up to these planned gifts. And you, again, you have to believe in it. So Adam, do you have any final words that you want to share?
No, I agree with Jim. It's a process. It's a grind. You know, you have to start somewhere so that you can get somewhere. And so most journeys start with a path down the road. You know what I mean?
So you have to start somewhere so you can get somewhere. That is so true. So in closing, if there's a topic you want to hear about, you know, hit me up on Facebook at Supporting World Hope to let me know, and tap the live button so that the next time we go live, you can also be notified. And you can also watch these videos. This video that we are recording today is going to go up on our YouTube channel. It will be shared on the website, supportingworldhope.com. It will be on Facebook, of course, where it originated, and it will be on LinkedIn. So you can watch this at any time at your leisure. And because it is video and it's audio, you can listen to it like a podcast, you know. Listen to it at your leisure. Don't create stress for yourself. Plug it in your car when you're going from point A to point B. I always encourage nonprofit professionals to create their mobile university. So don't stress yourself out about it. But this is another avenue for fundraising. And I will leave you with this. Your mission matters and deserves to be highlighted in your community. Your mission matters and can be an inspiration to those who need it the most. Your mission matters and deserves to be funded at its fullest capacity. And that is Sipping Tea with Sabrina. And we will see you the next time. Yes, sir.
Okay, so we're going to go ahead and comment on this video so that you can see our pages. And also we wanted to include that any conversation, whether it's just to discuss small items or just questions, there is absolutely no fee at all for the first consultation. So.
Perfect. Yay. Thank you so very much. It is my hope that people really embrace this this form of fundraising and this revenue process. And really, you know, it will behoove organizations because you want to be around for a long time. And this is a way that you as a nonprofit founder or a CEO or an executive can ensure that not only the legacy of the donor is being fulfilled, but the legacy of the nonprofit and the mission of the nonprofit continues on long after you're no longer the founder or the CEO. And so I'm really excited about the opportunity that you're giving people to just ask you questions and at no cost. So thank you for that. I really appreciate it. Thank you so very much. And with that, we are going to say, see you next time. And thank you for joining us.